If you love all things real estate in Houston, this show is for you.
Sounds so exciting.
We'll interview mortgage professionals, real estate professionals, special guests, and business owners from right here in the Houston community. This is Houston Inside Out.
Welcome, guys. And before we get into the show today, let's thank our sponsor. Today's show is brought to you by Audible. Audible is offering our listeners a free audiobook with a 30-day trial membership. Just go to audibletrial.com/Houston Inside Out and browse the unmatched selection of audio programs. You can download a title for free and start listening, guys. It's that easy. Just go to audibletrial.com/Houston Inside Out. Hey guys, what's up? It's James J, and we are right back at you with another episode of Houston Inside Out. Today we are talking mortgages, and specifically what happens to your mortgage after you close on your home. This question comes up a lot because sometimes you will close on a mortgage. 2 months later, you're getting information from another company that was not on the actual original documents saying, hey, your loan was sold to us, send us your money. And so we're going to address that. And there's really about two possible answers to this question as to what happens to your mortgage after it closes. So either the mortgage is going to be held in-house by the lender that you closed with. So whoever's name is on that document when you signed at closing, sometimes those lenders will actually continue to hold your loan and service your loan, meaning they're going to continue to collect payments from you. But what commonly happens is that those loans get sold to an entity such as Fannie Mae or Freddie Mac. Freddie Mac and Fannie Mae will then turn around and bundle up these mortgages. So they're similar type mortgages. So a 15-year mortgage, a 30-year mortgage, they're going to bundle up several of these mortgages into what's called a mortgage-backed security, or MBS. So when you hear the term mortgage-backed securities, that's what it is. It's a similar group of mortgage types. So FHA 15-year, FHA 30-year, conventional 15. That is what a mortgage-backed security is. Fannie Mae and Freddie Mac are going to then send that mortgage over to some investors. The bundles, they actually may contain thousands of mortgages that are bundled together and sent over to these investors. And then they're broken down into categories such as fixed or adjustable rate or by length of term. So if you've got, again, thousands of 15-year mortgages, thousands of 30-year mortgages, that's how it's grouped together. The quality of these mortgages is extremely important to these investors. So the quality will ensure that the mortgage-backed security retain their value and hence deliver value to the investors. It's so important, guys. I cannot emphasize this. It is so important that the investors will have forensic audits completed on the mortgages that they purchase. So the quality, they're going to be ranked based on 30-year fixed with a certain credit score. So they basically turn around and depending on the credit scores, they're going to assign that mortgage-backed security a grade. This is very important to investors because the lower the grade, the higher the risk. If these loans are unable to actually pass the audit, the investors may send them back to Fannie or Freddie Mac and the lenders for repurchase. And this is the last thing any lender wants to do. Lenders do not want to buy back a loan. So back in 2007, mortgage-backed securities imploded because there were many loans that were defaulted on. And a lot of that was due because the borrowers have very, very easy qualifying standards back then, and there was very little documentation scrutiny. So if you recall back in 2006, 2007, there were a lot of loans that were given to people with zero documentation or very little documentation, which kind of led us to the mess of 2008. In an effort to keep repurchases to a minimum, lenders now have higher qualification standards. So if you've not owned or purchased a home in the last 10 years, you will see that the mortgage qualification and the mortgage standards have changed significantly since the 2008 crash. And so it's a little more challenging to get a loan, but it's ultimately to protect everybody involved. That is buyer, that is lender, that is investor. Very, very important that the quality of these mortgage-backed securities is much higher than it used to be. And we don't want to go down the road that we did 10 years ago. So that's a little bit information there about what happens to your mortgage after it closes. Ultimately, guys, the terms of your mortgage, assuming you have a fixed rate mortgage, 15 or 30, your principal and interest do not change. All right. They will never change. So it doesn't matter who you're sending payments to. That part will never change unless you sell the house, refinance it. Those are really only two ways that your principal and interest will change. So if you guys have any questions, head on over to myhoustoninsideout.com. That's myhoustoninsideout.com. A lot of resources there for you guys, and I will talk with you soon. Be blessed.